makers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here at the Qatar Economic Forum in Doha. Now, let's join Bloomberg's Eric Schatzker as he moderates a panel on the hunt for growth.
That makes sense for people who are willing to take risk in search of growth. Now, before I turn to my panelists, I do want to remind all of you that we'd be delighted to hear from you. A little bit of input in terms of questions from the audience would be most welcome, and they'll come to me and I'll do my best to weave them into the conversation that I'm about to have with these three people here. So don't forget. I think it would be helpful, as I said, to establish a little bit of context. So I want to do the whole elevator pitch thing. I'm going to ask each of our three panelists to tell us in one or two quick sentences who they are and what they specialize in as an investor. Stephen, would you like to begin?
Well, first of all, it's great to be back in Doha, and thank you for hosting us here for this session. At Liberty Strategic Capital, we're mostly focused on technology and financial investing, particularly banks and insurance companies, and in technology across everything from data centers to cyber.
Jenny.
Great. Hi, everyone. I'm Jenny. It's great to be here. You know, as we were coming on stage, I realized that if you want to be an investor, you should be wearing running shoes. Because part of being an investor is you got to just run faster than most people. You want to get ahead of the trend. So Granite Asia, we are a global investor, early venture and early growth. And so what we do is we look for the best entrepreneurs, help to grow them as they grow from 0 to 1 to IPOs and, to public. That's what we do on a global basis.
Marcelo.
I'm Marcelo Claure. I have a few different businesses, but where my energy sits today is having the ability to buy companies, apply AI, turbocharge them, and generate a lot of returns for our family office and my investors.
Terrific. And I would just point out, in addition to what Jenny said, that yes, if you want to be an investor, you need to wear running shoes, and if you want to be a moderator...
Precious.
What I'm most interested in, and I suspect what you're most interested, again, is growth opportunities. I want to know from our panelists, what is the single best investment opportunity in the world right now, regardless of industry, regardless of region, that you see, why, and how you're making it available to your clients? Marcelo?
I would say that today, everybody talks about AI, right?
They do.
We have to learn how to divide AI.
Ad nauseum, I might add.
I'll say that most of the money, about $350 billion a year, go what I call the factory of AI. And that is, people are investing in power, investing in data centers, investing in semiconductors, LLM and applications. And it's incredible. Think about it, $350 billion a year. What I'm focused on and what I do believe single-handedly will be the most value creation is in enterprises that have the ability to grab the technology and be able to implement it, what I like to say, apply AI. And, we have a really good use case. I'm very lucky to be the largest independent shareholder of T-Mobile in the US, and we made it publicly that through a digital and AI transformation, we're going to generate close to $10 billion of profit. So put things in perspective, it has taken us about 120 years to get $30 billion of profit, and it's going to take us 3 years to add another 10. And what you can do in use cases, in customer service, in sales and marketing, in software development, in the back office, in supply chain management, and so on. And the reason why I say it's the best investment is because what we do is we buy good companies and we make them great. So even if we don't do such a good job, we will always have a great company. So I've moved from being a venture investor, a growth equity investor, to now I see the single-handedly as the most important investment will be in buying incumbents who have an edge and be able to apply AI and make them great.
A couple of follow-up questions. What's a good example of an incumbent? How could you take a company that we might, or an industry that we might know and understand, and turn it into something that's so much better than what it is today that you can create the kinds of returns that you're talking about?
I'll give you an example. A company in the US called K-Health. Today, we're the primary care physician of the world's leading hospitals. Mayo Clinic, Mass General. And the way it works is, our AI will ask you the right questions about your symptoms, be able to combine it with your electronic medical records, combine it with our clinical AI, and in less than 5 minutes, we have the ability to diagnose a patient, prescribe, and develop a cure. And what we do is we grab that information and we pass it on to the doctor, because the doctor, at this point in time, will have the final decision. So what does that do? It drastically reduces the cost to provide service by 90%, and it also provides a much better quality than when a doctor was doing it on his own. So the results are radical. I mean, think about it, 90% reduction while enhancing, that's a power of AI, while enhancing the quality of care that we do. If I go back to T-Mobile, the quality of service at a telco that you're able to provide customer service, when you have something called proactive customer service, what does that mean? AI, on a just-in-time basis, is able to predict if there's going to be an issue with the customer and fix it before it happens. Very different than you calling a customer care and complaining about my bill or complaining about I drop a call and all that. So these are real use cases that we as investors are so lucky that somebody else is investing in the factory of AI.
The second follow-up, why is a telco, why is T-Mobile, a wireless services provider, the right platform from which to operate?
Well, I'm very lucky to be, like I said, the largest independent shareholder. And when you have a company that has 130 million customers, a huge proprietary data set, then you're able to innovate. And we have deep partnerships with OpenAI, we have deep partnership with NVIDIA, and we've done some pretty incredible things. I do believe that the T-Mobile AI transformation, it is basically the largest transformation of its kind. There's no other company in the world that can say, we are going to...
Well, that's Bloomberg's Eric Schatzker moderating a panel hunting for growth here at the Qatar Economic Forum. Now, terminal subscribers can continue watching that on Live Go. With me now, Valérie Noël, head of trading at Seas Group, to actually talk about the market, some of the turmoil that we saw over the last couple of weeks. Valérie, thank you for joining us. I mean, it's been a pretty tumultuous, crazy couple of weeks on the markets, but it seems to be that we're back to where we started. What's been the most interesting bit that you've seen playing out on the markets?
Yeah, well, it's true that we had a very sportive April, and we are back, as you said, from we were before the 8th of April. I think the retail investor made a big things in the last month. They inject 50 billion in April, 5 billion only on Monday. So they're almost the new market maker of the market, and that's something very new for us.
What do you see gold doing? I know you track, for example, gold ETFs and some of the things that's happening with gold. That's been one of the most interesting asset classes.
Yeah, gold used to be like the edge, and we can almost say now that the gold is a benchmark. We have seen inflow in the gold ETF like 85 billion since the beginning of the year. It's the asset class who's got the most performance since the beginning of the year with 21%. So it really became part of the portfolio construction that we have at the bank.
What do you see changing in the markets overall? If you look at how capital is being deployed, is there anything that you see as fundamentally different? Treasuries, I know, behaved in a different way to what they've had in past crises.
Yeah, well, I think uncertainties, create that you really need to have a very well-diversified portfolio. And that's the aim for us for this year. People used to be very US exceptionalists, US. And we have seen some shift from US to other countries since the beginning of the year, including bonds. And I think really the aim or the goal for the client this year is really to be well diversified, especially with all these uncertainties that we are facing now.
Do you need to chase growth? Again, to Eric's very good panel and the hunt for growth. What does it mean as a head of trading?
Yeah, I mean, you always try to find some alpha for the clients, and but to manage the risk also. So yeah, you need to find the good opportunity for them, and that's our aim, and to limit the risk also, to hedge sometimes the portfolio. So that's it's a big year for us, and.
Are clients asking, for example, to be much more diversified into alternative instead of public markets? There's a lot of talk here in Qatar, for example, about private equity, about the role of credit. How do you see that changing the markets you're invested in?
Definitely, we had a lot of demand for alternative. So I think you should have part of alternative in your portfolio construction in this year, especially in the region when there is a lot of things to do about that.
how do you see actually capital being deployed in the region? Do you see it, changing? Are they asking for capital that they want to be invested coming back to the region?
Yeah, we have a lot of interest for the region. It's not easy to invest for a high net worth investor. Not easy to invest in single stocks because you need to have a segregated account, that kind of stuff. But yeah, we have good ETF, good funds. So we have more and more interest in the region by our clients.
Will the capital markets actually be deeper in the region in the next couple of years?
Absolutely. You've seen a lot of IPOs coming here, and we have more and more interest. And we just need to have a little bit more. The region needs a little bit more, not open, but give more opportunity for the client to invest on the legal point of view. Like, do not need to have a segregated account or need to have an omnibus account. So it's still challenging for a high net worth client to invest in a direct line in the region.
And Valérie, is that actually at the expense of capital markets in Europe? Do you see money shifting because there's a deeper pool here, or can both thrive at the same time?
I think we can both thrive in the same time. Yeah, here, Asia, I think the US exceptionally is a little bit away now, and people will shift the way they invest more globally. We also see opportunity in Asia, China, but everything almost ex-Japan. And we see some interest from clients from Vietnam. So that's one of our themes also this year.
Valérie, we've seen so much volatility on the markets that it must have been, sometimes your heart must have gone like on the trading floor. Do you expect that to settle down, given a bit of a blueprint, or can it just come back at any time?
I think volatility is here to stay, especially with the tariff. We actually don't know what's going to happen. We're on pause. And so volatility can pick up, one day for the other very quick. And we have seen that by the past. So I think it's here to continue.
I know you said, that means that you need a much more diversified portfolio.
Yes.
But what did you learn from the first bout of volatility?
Yeah, that, us, in our point of view, we didn't panic, and I think you shouldn't panic. If you are a well-diversified portfolio and you stuck to, some very quality name and quality region, you shouldn't be panicking. And but yes, you can always protect your portfolio. Everyone protect, the house, your health, but sometimes it's good to protect your portfolio.
Valérie, thanks so much for joining us. That was Valérie Noël, the head of trading at Seas Group. Now we'll have plenty more, of course, here from the Qatar Economic Forum. Also, oil jumping following a CNN report that the new U.S. intelligence suggests Israel is preparing for a potential strike on Iranian nuclear facilities. Now, an attack by Israel would hinder any progress in nuclear talks between Tehran and Washington and add to unrest in the Middle East, which supplies about a third of the world's crude. Well, for more, let's bring in Roz Matheson, OMA News Director. Roz, good morning. What do we actually know about any potential Israeli action against Iran and what effect they would have on the region?
Well, these reports have been coming and going now for quite some months, so it's unclear if there's anything new in this latest report. And we know that Israel has, of course, been preparing for a very long time, potentially, to hit Iran's nuclear installations. The question is, has anything changed that might make this more likely than some months ago? You can see oil today reacting, but not significantly, suggesting that the market doesn't see anything as imminent. But again, is there anything in the calculus for Israel that might see this shifting? We know the Israeli Prime Minister is frustrated about Gaza. He's indicating an even bigger military campaign is about to get underway soon there against Hamas. He's indicated that he sees Iran as being at a bit of a vulnerable point right now, a weak point. He doesn't want them to make progress on uranium enrichment. Perhaps the calculation comes that this is the time to try and attempt this. Of course, it's not without its risks. It would represent a major escalation in tension in the region. And the big question also is, how would the US view this potentially? How would the US president view this? Would he endorse this or see it as something he doesn't want to happen? Of course, he was just in the region where he was stressing the need for stability. He wants an environment for business, for investment, for trade. You don't want a full-throated war happening between Israel and Iran in all of that, Saudi Arabia also. And then there's just the practicalities of this, because hitting nuclear structures deep underground requires help. And there's big questions about the feasibility of being able to even do it. And would other nations assist? Would countries allow flyover of their airspace, would the US provide some kind of capacity or assistance? So a lot of things we don't know. And the big question really is, again, in all of this, is anything changing in the Israeli calculus that makes this more likely than the reports that we saw 6 months ago?
This comes as the international pressure on Israel's government is also ramping up, Roz.
Well, that's right. We can see Europeans, the UK, Spain, a long critic of the Israeli administration over the situation in Gaza. Again, the concern about aid, which the Israeli government says is now resuming to some extent at least, but again, the humanitarian situation there. And with Israel talking again about really ramping up the military campaign inside Gaza, essentially talking about destroying, flattening Gaza and warning people to get out of the way. And the question is, where can people actually go to be out of the way, in a sense that something bigger militarily might be brewing in Gaza? And so the criticism from the UK, which is that it's going to stop conversations around a free trade agreement with Israel, not a massive trade partner with Israel, but at least a significant one, the EU stepping up pressure. The question is, does that actually achieve anything? Because again, if the Israeli Prime Minister and those around him believe that they need to push forward on Gaza, we've seen, over the past couple of years that they will do so regardless of that kind of pressure. And so whether the EU, Spain, UK and others have any impact on that remains to be seen, because it does seem as though for Netanyahu, he's just got a singular goal here that he's still keeping in mind.
Roz, thank you so much. Roz Matheson there with the very latest on the Middle East. Coming up, UK inflation jumps to its highest in more than a year, fueled by higher energy and water costs. We'll have more on what it could mean for the interest rate path next. This is Bloomberg. Welcome back to the Qatar Economic Forum here in Doha. Now, UK inflation jumping more than forecast to its highest rate in over a year, prompting investors to pair bets on rate cuts from the Bank of England. Now, for more, let's bring in our UK correspondent, Lizzie Burden. Lizzie, what explains the CPI beat?
Yeah, good morning, Francine. Well, it was initially a shock. You've got beats at the headline core and services levels, and you had the pound spiking to its highest since February 2022 off the back of the data. Gilt yields rising, house builder stocks down. But look, if you look under the surface of this, I've been speaking to our UK economics team, and they're not so worried. So, yes, you've seen traders paring their bets on Bank of England cuts, as you say, to just one over the course of the year. Our chief UK economist, Dan Hansen, says it puts a nail in the coffin of a June cut, but he's not panicked. And the reason is a lot of it comes down to bills. So this was well telegraphed that you would have this one-off rise in bills in April. It's what you see every year. Of course, you also had that rise in the payroll tax and the national minimum wage, but it's not expected to be an effect that you see again and again each month. On top of that, if you look at the underlying services number, that actually fell. And also, the question of whether to worry comes down to whether there'll be second round effects, and that splits the Bank of England. So do you see workers asking for higher wages to make up for the higher inflation? And yes, the chief economist Hugh Pill says this is the reason that you need gradual, careful cuts ahead, but actually our team says that's not the medium view on the Monetary Policy Committee.
Lizzie, thanks so much. Lizzie Burden there, of course, with the latest, and traders moving on the back of that, pairing a lot of bets on these BOE cuts. Now, the president and head of investment bank management at Barclays has told us there are still questions over the dollar's status as a safe haven because of continued uncertainty over U.S. fiscal policy. Well, Stephen Dainton said that as well as traditional havens such as gold and the Swiss franc, investors have also been turning to European equities. Well, he's been speaking to Bloomberg's Jumana Persecci here in Doha.
Uncertainty, obviously the US policy direction around tariffs, immigration, now taxes that are causing a lot of focus on treasury yields is probably here to stay. You have a substantial amount of uncertainty in almost every market. And that's why you're seeing investors flock to the safe havens, the traditional safe havens, gold, the Swiss franc, the yen, have all been major beneficiaries. Actually, you've seen people flock also to European equities as a place of stability, hence the performance of most of those indices this year.
How have clients been reallocating their portfolios on the back of those allocations? Are you actually seeing the flows going into the safe havens? Are they sitting on higher cash levels than usual?
You have definitely seen a move towards other safe havens. The traditional safe haven of the dollar is a question mark. And I think as we walk through the next 4-8 weeks, as a crystallization of the tax policy in the US begins to emerge in the fiscal position of the US, but we have definitely seen investors move, as I said. European equities have seen a material advance this year, in particular with a focus on fiscal spending in Europe, Germany of course, but also Italy and Spain, who have done exceptional things with their economies in the course of the last 5 years, are also seeing inflows of capital to them.
Well, that was Stephen Dainton, Barclays president. Now, earlier we also spoke to the Qatar Airways Group Chief Executive, Badr Mohammed Al Mir, on his airliner's plans with supplier Boeing. Now, this comes after Donald Trump announced a record order for the aircraft maker during his recent Middle East tour.
We are focused on one type of aircraft for our narrow-body fleet, which is the 321neo, and this is our strategy. We had 9 737-8 Maxes, and those we're basically leasing to Indigo for them to fly to Doha. On the longer term, we have an order of 25 737 Maxes -10. And because we have decided to stick to the 321 Neos, we agreed with Boeing to replace the 737 MAX -10 with additional 787-9.
So basically they've been reworked as part of the deal with Boeing last week?
Yes, correct.
This deal is not only anchoring in the moment, it's anchoring in the future and making sure that Virgin Australia is strong and thriving domestically, as well as now starting long-haul operations for the first time in 5 years. So it's a really watershed time. It also takes partnerships to another level. So we were already five years we've been working together as businesses and building depth in our partnership with marketing and sales activity. But this takes it to another level with us Virgin Australia starting to fly long haul, but also starting to work collaboratively to figure out where we can lean on Qatar's scale so that we can procure better as a smaller airline. That's very important to Qatar Airways, but also needs that extra scale and heft that comes with major aircraft orders.
I mean, would you support an IPO? Well, that was the Qatar Airways Group Chief Executive, Badr Mohammed Al Mir, speaking to me alongside Jane, Hedwika, former Virgin Australia Chief Executive Officer. Now, let's get straight to a panel, Donald Trump Jr. amongst the panelists.
It's so oppressive that you wouldn't even think so. I think it's an incredible opportunity. And what I saw last week looked truly spectacular. It's an entire reset for the future of Middle East-U.S. relations, the business opportunities. And I think it was just incredible to see. It's truly spectacular.
I mean, we're going to talk about the funds, but I know the primary purpose is obviously to invest in American companies, but you also were traveling with the president, and of course there are many business executives who were traveling around with the president as well. What were some of your impressions of the meetings and the energy that came out of last week?
Yeah, I had the opportunity to be in Riyadh and Doha while the president was here last week, and I mean, simply put, it was historic to see that reception from these countries, but also the kinds of deals that were made. We've never seen anything like it. And I think most importantly, just maybe from a geopolitical standpoint, it was a reset of relations between the region and the United States, which I think so many of us have been waiting for, particularly when you contrast it to the disastrous policies of George W. Bush in the region, or even the incoherence of the Obama administration. So to have someone come here and approach this from a realist foreign policy, which is what the people voted for, which is a more realist foreign policy and a policy of peace, I think was welcome not only here, but also at the United States, because it's what the voters wanted.
Don, the Trump organization announced several deals as well in the last couple of weeks. Have you found that it's been it's gotten easier to get business done because of perceived access to the White House?
No, I don't think it has anything to do with that. Again, we spoke about it backstage. I spoke, headlined the Dubai Cityscape Conference in 2007. We've had deals in the regions forever. It's something we've looked at, again, prior to most people finding it sort of acceptable to be over here. So I don't think that's changed. I think it's the fact that we've had these relationships for so long that so many of these things have been able to happen. People have talked about that, but the reality is my father was a real estate investor and a builder for 40 years. It's what we've done. And so as the region has developed, as more of these areas have really expanded, especially in the ultra-luxury sector, which is obviously the focus of the Trump organization, those opportunities have abounded. But we've been talking and doing these things both prior to his presidency and during for my brother and I, while he had nothing to do with those things.
Yeah, I mean, critics will say that the U.S. government probably shouldn't be doing deals with entities or government-aligned entities that are also doing business potentially with the Trump organization. What do you think?
We're not, the Trump organization isn't doing business with any government entities. They're doing it with private investors. I mean, many of the people in this room probably know them or have talked about them with that. And so, there is a very clear distinction between those things. In the first term, we actually said we're not going to do any foreign deals, even though that's what we did. Yeah. We had done it for years. We just said, hey, we're going to do this. And the reality is it didn't stop the media from constantly saying, you're profiteering anyway. It was like we stopped entirely. Even the deals that were totally legit, it didn't stop the insanity. So this time around, we said, hey, we're going to play by the rules, but we're not going to go so far as to stymie our business forever, lock ourselves in a proverbial padded room, because it almost doesn't matter. They're going to hit you no matter what. So we're just going to play the game.
Let me rephrase the question then. Are there any investments or ventures you would not get into because of conflict of interest?
Yeah, I mean, the Trump organization itself wouldn't be doing direct deals with government entities because that's not what they do and it's not what we have. But that would be it. We're just going to play by those actual rules that are laid out by the government. We're going to play by the rules, and it's as simple as that.
Yeah.
And on the 1789 side, I think it's very clear. We only invest in the United States in private companies, and we take minority positions alongside the largest asset managers and most prestigious asset managers in the world. So it's quite simple. And then just if I may step back on the topic more broadly, I find it odd that this becomes a line of questioning, particularly when I look at the previous U.S. presidents we've had, both on the Democratic side, whether it's Bill Clinton or President Obama, who were basically broke when they came into office, have now become magically very rich. So I don't really like presidents that use the presidency as an apprenticeship and become rich later. I think that should be examined more than people who have actually done something in their life prior to coming into politics and then actually take a hit financially. Those are the types of people we should be supporting.
Yeah, I think all of us would agree that nobody in the vicinity or as a close family member should be benefiting from the president's office, position in office. Just on this point also, Amir, both of you started up the executive branch in DC. And again, there's been a lot of controversy around that due to the high membership fees. It's about $500,000 to get access to it. But then again, there's a perception that this is an opportunity for members to get closer to the axis of power.
Anyone who's a member there could get access anyway, so they don't need to go to a club to do that. So that's just a total misnomer. The other thing is that the actual memberships for regular memberships are a lot lower. That's been reported. And in addition, I think this is kind of the theme I want to point out here. What Don and I have been doing before we were invited to be on panels like this, I think only Newsmax was calling us during the Biden administration. Yeah. Not that anyone watches that here, but in any event, we've been doing this for 5 years. When we see a problem as if being censored or deplatformed, as was happening to conservatives in America throughout the Biden administration, we're capitalists. We create other opportunities. That's about as American as apple pie. The executive branch, that club, is another example of that. Frankly, everything in DC kind of stinks. So there were no good options to go and have social interactions with people with our ideological views. And so we wanted to create, again, a solution, which is what we do in every part of the economy through our fund. And we created another option for like-minded people as a refuge away from, respectfully, reporters and Democrats.
Yeah.
Well, I mean, perhaps we should talk more broadly even about the greater conflicts thing. I know for me, I get the Don Jr. is the next Hunter Biden. And I say it's such a false equivalence, right? I've been doing this for a long time. We were businessmen both before. We will be businessmen after my father's presidency. It's what we've done. I didn't become a businessman when my father took office. The difference being we have invested in companies for decades. I saw a problem that was out there. When no one would talk to us, when we were written off the face of the earth in 2020, I still saw the attacks. I started a publishing company, not because I think publishing is the most lucrative industry in the world, but because we had to make sure these voices are heard. I was the second verified user on Rumble. I helped them set up the pipe that enabled them to go public because the other social media platforms were canceling us. When Twitter threw my father off, we started Truth Social. So we created actual businesses as a solution to the problems that were being thrown at us. We got into cryptocurrency. That's another one I read about, a lot of conflict these days. We got into cryptocurrency because we were debanked. And so it's interesting. I mean, there's many people in this room that in the past I could have called at any time in my life, hey, I need a loan to build a building, because that's what we did. And I would have gotten a call back and a loan in about 5 minutes. All of a sudden, those people wouldn't take your calls. They wouldn't have your bank accounts. And so we did and invested in businesses as solutions. Yeah. The corollary to that is Hunter Biden, who magically became a businessman when his father took office. He was paid by shady foreign companies to peddle influence and influence American policy. And that's not what we're doing.
So let me just ask you a question before we move to 1789. But I do want to ask you, since you bring this up, free speech, do you still feel that you're censored? Because you're pretty outspoken. You say I think whatever you want.
I think Elon buying X was a major game changer, but we were censored across the board. By the way, I was on Fox News every day of every week for 5 years, and in the early 2020, after the election, I wasn't on for 2.5 years. So it wasn't even just the liberal-dominated media or social media platforms. We were just off. So again, we created our own solutions. We fought back. Elon buying X changed the game because it didn't become a conservative platform. Liberals just weren't comfortable with anyone being able to fight back. They were so used to anyone putting up a credible argument to them just being shadow banned, just being censored. We've seen that with our own eyes. So we created solutions to all of these things. They're not conflicts. They're a reaction to the market and to frankly, the landscape that was presented to us because, as I've said, we've always been business people who are coming up with us. We're innovators.
I mean, let me ask you about 1789. I believe you've got about $1 billion assets under management. According to the conversations we've had in the back, I understand that the fund will only invest in industries that are aligned with MAGA philosophy. So what is in the portfolio right now?
Well, by MAGA, we mean Make America Grow Again. And that's kind of our thesis. And it comes within this paradigm that we've defined as entrepreneurship, innovation, and growth, which is our own acronym, which we find is a contrast to ESG. The notion that we observed is twofold. One, that the largest companies in the United States had become effectively monopolistic and were suppressing, in many cases, through a backdoor route, constitutional protections. He's talked a lot about the First Amendment. It's a reason why we've made investments in media. You saw the role that independent podcasts played in the election. The landscape is changing dramatically because people are hungry for that type of information. We invested in Tucker Carlson's new company. We invested in Substack, which is a free speech platform on the digital media side, trying to enhance the First Amendment in the United States through the private sector. And then, of course, we won't stop there. We believe the Second Amendment is also very important. Later this month, Don and I and our team will be taking a digital retailer called Grab a Gun public, where you can buy guns and ammunition online just like you can on Amazon, because we have a Second Amendment right. But again, that's an entire area that's been starved of funding in the United States for ideological purposes. And by the way, it's not just about whether we think it's good or bad. I think it's destructive for shareholders. If you look at a study of public benefit corporations, which are companies that behave the way that ESG overlords would love them to behave, since they've gone public, they're down about 80%. So, you can say what you want, but if you're a capitalist, you shouldn't lose money. And by the way, if they want to lose money and do ESG, we're okay with that. Go ahead and do that. But we're going to provide the other half of the country, or probably 75% of the country, an alternative. And that's really the genesis of why we exist. We have now expanded that into in our opinion, investing in the best disruptive technologies in the United States. And so our basic KPIs is we're looking for TAMs of over $10 billion, companies that are growing over 25%, and we're looking for a liquidity event in 2 to 4 years with 200 to 300% returns.
Isn't there an argument that what was the parallel economy is now becoming mainstream because of the change in thinking?
But someone had to actually do that. Right. It was very unpopular to do these things. We took another company public during the last 4 years called Public Square, an alternative marketplace to the places that were taking advantage of Americans. So many Americans, and it was sort of interesting, we did these things because half the country was being left by the wayside. Half the country was literally concerned about being debanked. They couldn't get insurance. They couldn't do so many things. And everyone pretended like it wasn't happening because they're in their spheres of New York and LA and Washington, D.C. They didn't realize what was going on with an entire base of probably about 150, 175 million Americans that legitimately had these concerns. They were flagged, by the FBI as being extremist or being terrorist because they bought MAGA apparel or a Bible. This stuff was actually going on in the United States. And so it was an entire segment, half the country, that no one would even cater to. So Omid and I had been discussing this for years, since 2020, and he said someone has to cater to that. That was a big risk. That wasn't that easy because, again, of all the problems that went around that. But what's nice about us is because we took that risk, because we gave those people that platform that they so desperately needed and felt they weren't getting, I think we probably have the most credibility of anyone in the world to do this because we were the ones that had the guts and were willing to put our names, our money on the line to make sure that these people had a chance.
The 1789 is the year the Bill of Rights was introduced in the United States. So, it's very much part of the ethos. Yeah.
So let me come back to that credibility point. Moody's just downgraded U.S. sovereign rating on Friday.
Jumana Barsechi there speaking to Donald Trump Jr. and Omid Malik of 1789 Capital. Now, terminal subscribers can continue to watch that on Live Go. Elon Musk says he's committed to leading Tesla for the next 5 years and plans to dial back his financial involvement in politics. Well, he spoke to us in a wide-ranging interview here at the Qatar Economic Forum in Doha.
I think in terms of political spending, I'm going to do a lot less in the future.
And why is that?
I think I've done enough.
Michelle Hussein also asked Musk about the recent backlash against Tesla.
One question before we move on to other companies, which is that I wonder if some of what has happened to Tesla in the last few months, did you take it personally?
Yes.
And did it make you regret or think twice about your political endeavors? Because
I did what needed to be done. The violent antibody reaction, and I'm not someone who's ever committed violence, and yet massive violence was committed against my companies. Massive violence was threatened against me. Who are these people? Why would they do that? How wrong can they be? They're on the wrong side of history. And that's an evil thing to do. To go and damage some poor innocent person's car, to threaten to kill me. What's wrong with these people? I've not harmed anyone. So, something needs to be done about them. And a number of them are going to prison, and they deserve it. And more will.
You're referring to the attacks on Tesla showrooms, but I think...
Yeah. Firing bullets into showrooms and burning down cars is unacceptable.
Yeah.
Those people will go to prison, and the people that funded them and organized them will also go to prison. Don't worry.
But wouldn't you?
We're coming for you.
Wouldn't you? But wouldn't you acknowledge that some of the people who turned against Tesla in Europe were upset at your politics, and very few of them would have been violent in any way. They just objected to what they saw you say or do politically.
Well, it's certainly fine to object to political things, but it's not fine to resort to violence and hanging someone in effigy and death threats. That's obviously not okay. That's absurd. That is in no way justifiable at all, in any way, shape, or form. And some of the legacy media nonetheless have sought to justify it, which is unconscionable. Shame on them.
Well, South African-born Musk also again criticized South Africa's black economic empowerment rules introduced after the end of apartheid, during which black people were excluded from the formal economy by the ruling white minority. Well, Musk accused the government of having openly racist ownership laws.
It's improper for there to be racist laws in South Africa. The whole idea with what Nelson Mandela, who was a great man, proposed was that all races should be on an equal footing in South Africa. That's the right thing to do, not to replace one set of racist laws with another set of racist laws, which is utterly wrong and improper. So that's the deal, that all races should be treated equally, and there should be no preference given to one or the other. Whereas there are now 140 laws in South Africa that give that basically give strong preference to if you're a black South African, and not otherwise. And so now I'm in this absurd situation where I was born in South Africa but cannot get a license to operate in Starlink because I'm not black.
Musk's comments come ahead of a visit to Washington by South African President Cyril Ramaphosa, when Bloomberg's learned that the South African government is planning to offer Musk a workaround of black ownership laws for a Starlink internet service. Well, Jennifer Zamazaja, our chief Africa correspondent, joins us now. Jen, great to speak to you. So is this enough to actually repair the relationship?
Well, Fran, many people are saying that potentially this might be an opportunity to bring down the temperature, especially if you consider some of those comments that we did hear from Elon Musk yesterday. And a lot of the misconceptions, as the South African government has been saying, has been reported and talked about in terms of a lot of the laws within the government. Specifically, when you think about some of those commentaries that Musk was speaking about there, he's referring to black economic empowerment, which is, of course, laws and policies that were put into place after apartheid to help level the playing field to a certain extent. And he clearly still feels concerned and passionate about this. And so what we've heard from President Ramaphosa, at least, is potentially this is an opportunity for him to step in and clear out some of these misconceptions, revitalize relations between these two countries that goes back, of course, decades. And hopefully he can meet President Trump at a place where, they're both Gulf fans. That is on the one hand, but also they're both negotiators. President Ramaphosa was actually instrumental in helping end apartheid behind the scenes with Nelson Mandela. And so potentially them meeting behind closed doors and being able to sort of iron out some of these rules that Trump has potentially been misinformed about, levels the playing field, offers them an opportunity to reset, especially as we look ahead to the G20 later this year.
And Jen, talking about the G20, the U.S. Secretary of State Marco Rubio actually has been talking about President Trump's attendance or not attendance at the G20 meeting.
And that has been the concern and really the controversy around this G20. Will we actually see the U.S. represented? The first two meetings with foreign ministers and finance ministers this year, we've seen a little bit lower level executives that are represented, or government officials that were represented. And the question is, will the U.S. be at the table? And if not, what does that mean for other members of the G20? Potentially that gives President Ramaphosa an opportunity as a member of the BRICS community to step in and do some convincing. But this is really where Marco Rubio is saying the U.S. is right now.
We chose not to participate in this year's G20 hosted by South Africa, either at the foreign minister level or the president's level. And it had a lot to do with some of these issues, in addition to some of the issues they brought on their agenda, which we don't think reflect the priorities of this administration.
And of course, Fran, that is those economic empowerment laws that Rubio is talking about. There's also these eminent domain laws that the U.S. administration has been talking about. So potentially President Ramaphosa comes in and clears the air and offers the U.S. an opportunity to be there later. They have said that it is very important. Actually, President Ramaphosa tweeted just how significant this relationship is for South Africa, but also as a part of the G20. And if not, what could that mean for other members of the G20 to step in? Not necessarily something that President Trump wants to see. So it will be interesting to really see where these two sides meet in the middle, potentially what concessions South Africa makes, and then what President Trump does say about his participation later this year. But as Marco Rubio is stating there, there's still a bit of a ways to go in terms of negotiating.
Jen, thank you so much. Jennifer Zabazajah, their very latest, of course, on the G20 coming up. Now, finance ministers who've gathered in Canada for a Group of 7 meeting this week are trying to find common ground on trade issues while avoiding public conflict with U.S. Treasury Secretary Scott Bessent. The Canadian finance minister says G7 countries have started discussing tariffs on oversupplied, low-valued Chinese products.
We started that discussion, but certainly the low-value shipments have created a number of things that we want to discuss amongst ourselves and see how we can progress that discussions, because it's not only about the revenues, but it's really about, the customs and making sure that we protect our respective jurisdiction, that these packages are not used to smuggle things in different jurisdictions.
Some leading democracies have accused Chinese online retail platforms of flooding their markets with low-value goods, and U.S. President Donald Trump has already targeted these items by removing the de minimis exemption with his tariffs on China. Let's bring in Brendan Murray, our global trade star. So, Brendan, it seemed tariffs front and center of discussions at the G7 meeting.
Yeah, exactly. So this meeting comes at a key time. We're basically at the halfway point of President Trump's pause on his global reciprocal tariffs. So the countries are coming, the key countries in Europe, Japan, and Canada and the U.S. are going to sit down and try to hash out where we are. So far, the administration in the U.S. has really only gotten a limited framework for an agreement with the U.K. It's kicked the can down the road another 90 days with China. There are some deals in the works with South Korea, Japan, and India, but those are moving on from the short term into a more medium term track. So these key economies, these developed nations, are going to have an opportunity to discuss ways they might be able to coordinate to crack down on Chinese oversupply, and perhaps ways that they can together lower trade barriers amongst themselves.
Brendan, meanwhile, the UK Chancellor and US Treasury Secretary are set to meet on the sidelines of the G7.
Yeah, exactly. A lot of people are looking at this U.S.-UK deal to see if it's a model that they're going to get. The EU is one of those, and some of those Asian countries that I mentioned are trying to figure out if that 10% floor is there to stay for everybody, or if there's any wiggle room in that. So far, by the looks of it, the U.S. administration is saying you're not negotiating that away. So this conversation between the finance ministers from the U.S. and the U.K. will be closely watched to see if there's any room there to negotiate the details from the sort of broad framework that they've already agreed upon.
Brendan, thank you so much. Brendan Murray there on the very latest, of course, on these trade pacts. Well, that's it from me from the Qatar Economic Forum for now. Coming up, Marks & Spencer warns of a £300 million hit to profit from the cyber attack. We'll have the details next. And this is Bloomberg.
Welcome back to The Pulse. I'm Kriti Gupta in London. OpenAI, Softbank, and Oracle have embarked on an ambitious journey to build one of the largest AI data centers in the world. In a new episode of The Circuit with Emily Chang, she speaks to Sam Altman and Masayoshi Son about how the $500 billion Stargate initiative came together.
How did you get to talking with Masayoshi Son and Larry Ellison, and how did you all come together?
I did 2 kind of long trips around the world, and a lot of it was to talk to developers and governments, but a lot of it was also to just really try to get my head around the supply chain. On one of those trips, I met with Masa, and we got to speaking about what it would take to do compute at this kind of scale.
Hi, Masa. It's so nice to see you. What conversations did you have with Sam that led to Stargate?
Well, we have a shared vision of AGI coming soon, and we need compute.
Of all the bets you could make, why this? Why Stargate?
Well, I believe in the vision that this AI, the AGI will change the mankind's life in every aspect. And we are lucky to see this enormous revolution, and I'd like to be part of that. I get excited.
Last month, I came to celebrate your winning and promised that we will invest $100 billion. And you told me, oh, Masa, go for 200. Yeah. Now I came back with 500.
Explain the math to us. How does it all add up to needing $500 billion?
Well, that covers the capacity we think we need for the next few years, given our growth projections. The interesting question is if we knew how to get $1 trillion right now, which we don't, would we be able to deploy that profitably in the next few years? And I'm not sure about that, but I feel confident we can make $500 billion of value back.
$500 billion. He wants $1 trillion. You can catch the full episode of The Circuit Season 3 when it premieres tomorrow on Bloomberg Television. You'll also be able to stream it later on Bloomberg Original. Let's go from the tech sector to the retail sector right here in the UK. Marks & Spencer posting its best pre-tax profit in 15 years, but its earnings overshadowed by a fallout from a cyber attack. Let's get the latest with Bloomberg's Charlie Wells. Charlie.
Crude, so M&S shares are under pressure this morning, and let me give you 300 million reasons why that is happening. That is the amount in pounds that M&S said this morning they face in a hit to profit from this cyber attack that has debilitated the online operations of M&S since the Easter holiday. Their website is not able to process customer transactions, and this is happening for M&S, but it is also happening across the British retail space. We are seeing this attack, of course, from that Easter weekend. If you go through the timeline there for M&S, but also the Co-op saying that they were attacked just a few days later, and then a day after that, Upscale Harrods saying that they were targeted in an attempt, and M&S also saying that customer data was put in a vulnerable position. So it is in this context that we are starting to see risk managers talk about cyber risk as the number one fear that they have in 2025, according to a survey by Allianz. That is more than regulation, and that is more than even a fire, just speaking to the fact of how big of an issue this is for corporates.
Absolutely. And speaking of corporates, let's get the latest on another. Switzerland's Julius Baer also in the headlines.
That's right. So the second largest listed wealth manager in Switzerland has reported that they have a loan loss of $156 million related to some real estate developments that they helped finance. Now, this comes as new management tries to steady the firm as they move away from a crisis related to René Benko's Signa. The bank says that these fresh losses have nothing to do with Signa, but investors are not liking what they're seeing from this report that came out early because of some Bloomberg reporting. There is some softness in assets under management and net new money that investors this morning don't seem to like.
Absolutely. Bloomberg Charlie Wells giving us the latest on some of those movers for today. We thank you so much. In the meantime, plenty more to come from the Qatar Economic Forum, including the Franklin Templeton CEO, Jenny Johnson, and Aker Group CEO, Sebastian Bazin. And join us later for an exclusive interview with U.S. House Speaker Mike Johnson. That's live at Bloomberg Television, radio, and online after 2 p.m. London time. Coverage all across the board. Stick with us. This is Bloomberg.